Well, good afternoon. It is Monday and we're around about midday, which means it is time for another Monday morning update. And what are we talking about? Real estate. Why should you care about what's going on in real estate? Well, there's a lot of noise out there about recession, housing crisis, uh, panic selling, you name it. And what I want to do today is just kind of share with you where we are right now, why it's important for you, and then answer any questions that you may have. So if you have anything that pops up, put it in the chat. I'll definitely respond to questions after the live stream. I want to keep this short and sweet. So I am going to share my screen and get right to it. And as we do every Monday, so let's make sure that this is going. There we go. We should be able to see that. So it's our market update. Jennifer Tim, the Welcome Home Global Group, empowering you with information to make sure you can make the right decision for you and your family. So let's get to what really drives the real estate industry. So it's all about the numbers, and I am a data nerd. And so it's home sales, home prices, month supply of inventory, mortgage rates, and affordability. It really doesn't matter where in the country you are. So let's have a look at the national stats. What is going on? So right now, and I get this information from a lot of my lending partners and from economists around the country. Mortgage rates currently trending high. I think we've all heard that narrative. The volatility is also high, and we'll kind of show you a little bit later what is coming down the pipeline this week that could influence mortgage rates. And as we discussed last week, mortgage rates are not determined by the Feds. The market responds to Fed rate increases, and then that basically results in the adjustment to mortgage rates. So let's have a quick look at what happened. We know that according to the reports in April, we all spent more money on credit. So we're out there spending money. We know that mortgage applications have decreased. Jobless claims remain unchanged, so that's a good factor. And consumer price index increased 1%. So there's definitely some volatility, and of course we're seeing that. The inflation rate, we're hearing about that in the news every single day, and that definitely all feeds into what the market dictates that mortgage rates need to do. So having a look at where we are sitting with mortgage rates currently, and this is as of this morning, a report that I received. So that 30-year fixed is sitting at about the 5.64%, which is a lot of us have that type of loan. Your FHA is a little lower. And of course, if you've got a VA loan, again, that's a little more favorable. But the rate is definitely up compared to where we were at the beginning of the year, which was around about the 3%. Reports that are coming down the pipeline this week, which could definitely impact where mortgage rates trend, whether it's up or down, is going to be the Fed interest rate decision. Are they going to increase the rates or not? And then also housing starts and building permits. We know when the builders stop building, then that impacts our inventory, and that impacts where interest rates tend to go. So when we have those reports available to us, we will definitely share those with you. So let's look a little closer to home. What are we seeing here in Southern California? Because this is where we are primarily, and we want to make sure that we understand how the environment around us is impacting what could be our largest asset, our homes. So we know that we're still sitting with really, really low inventory. I think this graph, and having a look at where we are currently as opposed to previous years. So, I mean, we're below 2021 for sure. And we're really low. We know that we want more. I mean, 2019, look where we were. So we're really low. That definitely is impacting the housing market as a whole. Not all bad news though, so let's keep going. We know that the rates have gone up. We've just had a conversation about the fact that interest rates were raised. It was one of the ways of combating the housing crisis that we were in, and this runaway seller market that we've had, which had to be reined in because that was not sustainable. So having a look at this, so we've just looked at, we've seen that our inventory has increased, and that's as a result of interest rates that have gone up. And so this comes from Reports on Housing, and you can see they did a comparison with 2013, where there was a need to increase rates. And then what happens when rates increase? We see in the green line showing us that the inventory goes up. So this is what we expected to see. This was intentional. Now, the rate of that rate increase, of course, is a little more dramatic than we saw in 2013. So let's carry on our story. So our active listing inventory, just again to put it in perspective, yes, we're seeing an increase, but what we are also seeing is that we've kind of sort of hit that normal natural peak that happens at this time of the year. So our highest inventory levels tend to be right at the end of spring, and then over summer it levels off, and then we get into our fall market and then the holiday market where nobody wants to move for very obvious reasons. So we are still way below where we could be or should be, and especially if we look at those 3-year averages. But the rate is probably, the properties that are coming onto the market are probably going to bring us back to that level. Again, this was the desired outcome of the rise of those interest rates. So all normal, not a sign of anything major traumatic that's going to happen. This was definitely an intentional move and a desired result, which we are now seeing. Buyers, aren't you glad that you have more choices? So again, let's have a look at the demand. So the demand is how many properties are going into escrow. We know that the demand has gone down because the buyer pool has shrunk. Obviously, there's some buyers who at the beginning of the year with a 3% interest rate were able to look at a larger budget for a home. Now, because the mortgage is going to cost them more, that buyer pool has kind of shrunk, and some of those buyers have kind of fallen out, or they've had to look in other areas instead of in Southern California. We knew this was going to happen. This is perfectly normal. Does this mean that there are zero buyers out there? No, absolutely not. And we'll continue that conversation. There are buyers out there looking for homes, and they're still not able to find what they're looking for and what they can afford. It just means that we're now moving more towards a more normal market than what we've seen in the last couple of years. So what do we mean by that? So let's again have a look at the time, the market time, because that is also an indication of where we are with our properties. So what we've had in the last couple of years is this totally insane property selling in less than, I mean, honestly, less than a month, which is an extremely insane hot sellers market. Sellers were demanding whatever they wanted, 30, 40 offers on every home, and everyone having to really go way over the list price to even get their offer to be considered. So what we're starting to see is the days on market is starting to increase again, and an expected desired outcome from the increase in the interest rates. That is what happened in 2013 as well. When the interest rate went up, the days on market went up because the demand was declining. So what we really would always hope to be in is more of a balanced market, where when you put your property on the market, 90 to 120 days of being on the market before you go into escrow, that's the desired outcome, where it's a better market for both buyers and sellers. I know sellers, it's hard to understand that when all you're thinking about is just going higher and higher with prices. But if we don't have buyers, then, we've got to get back to that balanced situation. So where are we sitting currently if we look at the numbers? Oh, hold on, I did it again. All right, so this is kind of where we've seen those days on market adjusting with that increase. March 17th, 24 days in Southern California before your house went on the market. I mean, barely hit the put the for sale sign up and those properties were in escrow. We're now sitting in Southern California at 49 days. We're still in a hot sellers market. So let's go back a slide. Hot sellers market is anything that sells, so doesn't sell, so goes into escrow. Let me make sure I've got my terminology very clear. Goes into escrow in less than 60 days of the property hitting the market. We are still at 49 days. It is still a hot seller's market. So sellers, don't despair. If you put your house on the market, you're still going to make sure that it sells. You've just got to make sure that you are pricing ahead of the market. Price reductions. We're all seeing price reductions right now in our neighborhoods. We're seeing it online, or we're seeing signs. And again, is this something to worry about? No, it just means that this is going back to the norm. There are always sellers who have a preference. And again, their agents, if they've hired the right one, is really helping them understand how to price ahead of the market. Some sellers still choose to add a little buffer to their pricing. Or maybe they really just don't quite understand that their property isn't the most desirable from a location point of view, or isn't quite as updated as a lot of today's buyers are looking for. So they're kind of comparing themselves to another property which isn't equitable, and they're making a choice to go on the market a little higher. Normal to see a 30% of properties on the market have at least one price reduction, especially at this time of the year. We are starting to see that from the counties in Southern California, that we're getting a little closer, and some are already there at around about that 30% of properties are seeing a price reduction. Is this something to panic about? No. Absolutely not. This is not an indication of the entire housing market in Southern California about to come crashing down around us. Absolutely not. It really is just a normal trend as we're moving closer to what should be a more balanced market, real estate market. Again, it is a little sort of red flag for sellers that you need to price carefully. Listen to the advice of your real estate consultants who are watching the market, who are reading the numbers, and are able to tell you exactly what the trends are. We want you to be successful as a seller. Part of that, one of the most important parts of that is your pricing strategy. So make sure that you know the consequences of the list price that you are choosing to go to the market with. Bottom line, for buyers, it's affordability, house prices, household incomes, and the prevailing mortgage rate. So buyers, for affordability, pay attention to your budget. Understand what that monthly mortgage repayment is going to involve. Make sure that you're staying within your budget. You don't have to extend yourself. Make sure that you're making the right decision for your family. Again, hire the right consultant, real estate consultant. By the way, we're available to help you. And let's really work through those numbers. We'll work with your lenders and we'll make sure that you're looking at the correct budget for your family based on what your goals are. This is just that example. I shared this last week. I don't have an updated one, but this is kind of for buyers where you could have been at the beginning of the year and where you are now. And it just shows that the price increases, the mortgage interest rate increases are definitely impacting your ability to purchase a home. And it doesn't mean there aren't any homes. There are plenty of homes out there and more coming on the market every day. We can help you. We can come up with the right strategy. And also, we'll be very honest with you and help you. If you decide this isn't the time for you to purchase a home, we totally respect your decision. Do what's right for your family now. Okay, so making this short and sweet, but this is the most important thing. The bottom line. Why should you care? Is the housing market crashing? what's happening with the prices, what's happening with appreciation, and most importantly, here in Southern California, is every city, is every neighborhood being impacted equally? So let's get to that one. And I'm really excited about this. No. Bottom line, not everyone is being impacted in the same way. So what do I mean by that? If you are in or looking to purchase, or you currently own a home in some of our coastal communities, you're not seeing the same impact that others are. If you are at a luxury price point, your buyers are not getting loans. They're not impacted by the increase in interest rates. Most of the luxury purchases are cash. Why are luxury buyers buying properties? Because they're looking for the lifestyle that their property offers. They are not restrained or constrained by that mortgage payment. They're choosing to buy out of choice because they're looking for the lifestyle that your home offers to them. So keep that in mind. Do not be overly concerned by what's happening on in other neighborhoods, because again, if we're looking at Southern California, we've got this beautiful coastal region, we've got inland, we've got different price point neighborhoods. So if you're concerned about your neighborhood or curious about how things are being impacted in your specific neighborhood, please reach out. We would love to share the stats with you for your particular neighborhood so that you can see whether you're part of that national trend or whether you're basically insulated. I know we talk about June gloom and the fog that comes in from the ocean. Well, you know what? That's the same reason why you're in that area. You're being protected from a lot of what we're seeing nationally. But those national numbers kind of cloud us over when actually we've got beautiful sunny skies. And if I look outside, there's no June gloom right now. We have beautiful sunshine skies outside. So let's really look at this, because again, we've looked at national numbers, we've looked at Southern California where it looks like things are looking bad, but in actual fact, they aren't. So I thought that this was important to add in today. This is another report that came from one of my lending partners. Majority of top economists do not believe we're in a housing bubble, because gosh, how many people are asking me right now, are we in a housing bubble? Is everything going to come crashing down? So of the 114 economists surveyed this time, participants said they expect home prices to appreciate 4.8% on average per year over the next 5 years. Cumulatively, they expect over 20% appreciation through 2026. What other investment do you have where the future is looking as bright? So bottom line, do you believe that U.S. housing market is currently in a bubble? Of the 98 respondents with an opinion on the question, and these are the top economists across the nation, 65% answered no. And I like this as well. Some of the reasons provided for this belief included continued low housing inventory. So we know that pushes up the demand. Recent price growth caused by fundamentals like demographics and shifting housing preferences, rising rents, the work from home revolution, and high home owner equity. Huge factor there. A lot of people have a lot of equity in their home, and they've reinvested some of that equity back into their home with even greater, more recent upgrades to their homes. So, while it may not be easy to buy a home right now, it should still be a smart financial decision. Let's listen to the people who know. Okay, annual home price appreciation ties record high. And again, this is from CoreLogic, who they are right in the data business when it comes to home ownership and the numbers surrounding the real estate market. Home prices rose by 2.6% from March and 20.9% on a year-over-year basis. Again, let me ask this question. What other investments do you have that have grown at that percentage rate and are still expected to grow over the next period of time? 70% of homes sold above asking price this spring. That's a pretty good statistic. So people are making money from their assets. Bottom line, CoreLogic forecast that home prices will appreciate 1.2 2% in May. Now, remember, this is nationally, and 5.6% in the year going forward. So again, I like the example that they added at the bottom. If someone bought a $400,000 home, put 10% down, that would mean they would gain $20,000 in appreciation over the next year and earn a 50% return on their investment due to leverage. So bottom line, real estate is still a great investment. According to the experts, as of right now, there is no housing bubble. We're not expecting to see the market come crashing down. There are still very active, qualified buyers looking to buy homes because of the lifestyle choices that they have. So if you are considering selling your home and you would like to know what the equity analysis is for your home, what's happening in your specific neighborhood, please reach out to us. We are here to help you by providing you with the real data, not the national, not the California, not the Southern California, but the true neighborhood specific. I mean, as far as even where your home is, what street in your neighborhood, what is happening with the real estate around you so that you can make the right decision for you. So sellers, we are here to make sure that you're successful and can achieve your goals as far as selling your homes. Know that the buyers are still out there. They are looking for a home like yours. Buyers, we're here to help you with the strategies that will help you be more successful when you start your home search, really helping you understand what factors to consider and how to position yourself to be the most successful. So if you've got any questions, again, please pop them into the chat and we'll respond to them. Thank you once again for tuning in to our Monday morning update. And great news, beginning next week, we're actually going to start highlighting what is happening on a statistical level. So the data that counts, we're going to take it down to some of the cities and start showing you Laguna Beach and San Juan Capistrano, Dana Point, and San Clemente in particular. So those 4 cities, we're really going to start showing you some of the stats and showing you what's happening so you can see whether what's happening nationally, what's happening in California and Southern California, how that translates into those cities. And again, neighborhood specific information, reach out to us. We'd love to be of service. Have a great day. Bye.